Welcome to the Chrisman Commentary Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include around the mortgage industry in a minute or two, my interview with BeSmartee's Tim Nguyen on why modern mortgage lenders need configurable POS solutions that are fast, flexible, and built to adapt in any market. And plenty of President Trump's tariffs took effect at midnight. Let's review the impact on the mortgage industry. Thanks to today's podcast sponsor, Total Expert, the purpose-built customer engagement platform trusted by hundreds of modern financial institutions. Total Expert turns customer data into actionable insights that help lenders engage and guide consumers through complex financial decisions. By fusing digital touchpoints and human interactions, Total Expert humanizes the customer journey to create better financial outcomes, build deeper relationships, and win customers for life. Visit TotalExpert.com to learn more. The Fed doesn't set mortgage rates, but the markets seem focused on its every move and opinion since its mandate of maximum employment, price stability, and steady inflation is always precarious. I'm traveling from Michigan mortgage lenders back to California at California MBA's Western Secondary next week, and the passage of the Trigger Leads bill was a big reminder that advocacy organizations such as our MBA are worth being a part of. The MBA's Marina Walsh reminded me that it just released a home equity lending study that should be the interest to any originator or company who wants to understand that market and borrower and how to tap into that business. For the link to that story, as well as the latest employment and transitions, product services and software for lenders and brokers, and news from investors and lenders around the business, visit ChrismanCommentary.com. United Wholesale announced its earnings today, and stockholders are hoping for a nice rally, given that the stock price was at $9.74 within the last year, but has been in the $4 range for 4 months, a drop of more than 50%. I have a whole bunch of news for you. Let's see here. Well, UWM launched a rate and term 90 basis point pricing incentive for conventional jumbo FHA and USDA rate and term refinances. Mutual of Omaha expanded the availability of its new proprietary reverse mortgage solution, Secure Equity, which is available in 14 states. A&D Mortgage announced the launch of 2 new VA loan programs designed to help veterans, active duty service members, and spouses purchase property with greater ease and flexibility. Foundation Mortgage announced a new broker pricing special called Heat Up Your Pipeline, which offers tiered bonus pricing of 1/8 to 3/8 on full doc bank statement and asset depletion loans submitted through August 31st. PHH Mortgage said functionality for uploading document packages will be changing. And Champions Funding announced an owner-occupied no-ratio program built for borrowers outside the traditional box. Well, once again, there's not a whole lot to report on from yesterday as we're officially in the summer doldrums. We had the completion of a weak $42 billion 10-year note offering. President Trump's new tariffs officially took hold with higher rates for almost all U.S. trading partners starting just after midnight. And the agencies began releasing July prepayment data, which will contribute to increased roll trading along with looming TBA settlements. Oh, and United Airlines shut down for a brief period, as in grounded their entire fleet. Despite widespread warnings, the anticipated economic fallout from tariffs has yet to fully materialize, as we've all learned how much of our economy is really based on imports. Inflation has risen modestly, but remains far from crisis levels. The trade deficit has narrowed, and federal revenues are up, all without the kind of severe supply chain disruptions seen during the pandemic. That said, the labor market is showing signs of strain, indicating that the impact hasn't been entirely without cost. For today's interview, we wanted to welcome back to the show BeSmartee's Tim Nguyen to talk about why modern mortgage lenders need configurable POS solutions that are fast, flexible, and built to adapt in any market. He's CEO and co-founder of BeSmartee, which was started in 2007 as one of the original mortgage point-of-sale platforms. He understands that automating the mortgage process can improve and streamline the consumer experience, increase data integrity for lenders, and lead to a day where a consumer could enter fulfillment in minutes. The company officially went live in 2016.
I'm involved with a lot of webinars, but I also watch a decent amount in the industry, and I'm always enjoying it when I see you as a panelist on there. And you mentioned legacy tech in a recent one. You basically said it was built for a market that no longer exists, and custom solutions can't keep up. And I've heard just kind of anecdotally, people are liking solutions that are configurable rather than customizable for cost and for a variety of reasons. And I'm hoping you can expand on some of this, kind of like what technology can keep up and what should lenders be looking for in a modern solution.
Well, first, thanks for listening.
Yeah.
And that tagline really kind of hit home when we were, working on the deck, is that you're right, legacy tech is built for a market that no longer exists. And what we mean, or what our organization means by that, is you have to look at the industry, you have to look at the animal and the beast itself first. We are highly cyclical, unpredictably cyclical, right? We are compliance and driven, regulation driven. Loan officers, drive the organization, especially right on distributed retail. So there's a lot of unknowns. So what I mean by that statement, Robbie, is your existing solution is not moving fast enough. The market is changing too fast and it's so unpredictable that by the time you custom build something, you're going to have to keep on building it, or you're going to have to pivot. And that's what we really mean by that, is what you built for the pandemic boom, it didn't work during the post-pandemic boom. And the way the market evolves today, how do you keep up with that, right? And custom solutions really, at the end of the day, is great. You get what you want, but what you want constantly evolves. As you learn more, you grow, you shrink, and the market needs change.
Yeah, and that evolution has led us to a point where we're seeing a lot leaner ops teams. The affordability still remains a huge problem, and builders aren't building. Consumer sentiment is wavering with who knows what's going on with tariffs or inflation. There's a lot of factors out there, but let's focus on what tech can do to help, at least in the tech realm. Yeah, when we talk about a configurable POS, I think you're a big believer in doing more with less. And I'm wondering what you mean by that. That's another phrase I heard you use. And then also, how you can kind of do more with less without sacrificing the borrower experience that everybody's so focused on in this day and age.
Yeah, that's a great question. So leaner ops, definitely. So there's this quote I love. It's a pretty famous quote: "Survival is the mother of invention," right? Or necessity is the mother.
Necessity is the mother of invention. Yes, yes.
Um, and war, if you think about it, right? When it comes to war, so much innovation has come through it, right? From the stuff we created trying to compete against Russia and what NASA created for us. I mean, I learned recently, like the sausage was basically invented because of war, as a way for the soldiers to have food in this harsh, cold climate, right? So I think as necessity becomes true, right? People, lenders need to survive. They have to become leaner because you have to survive as an entity. You don't survive as an entity, right? You can't help anyone else, borrowers and other employees alike. Um, so I think the trick for lenders is to persist that discipline. Right? Think about the free money, for lack of a better word, that was made during the boom, and then it didn't become free more, then become extremely costly to even close a loan, right? Money losing to close a loan. And the ones that survive are bigger and better now, and they're going to have a very bright future. But point is, you are in this period where people had to operate very effectively and lean, and not just with people and technology spend, but also with process control and expectation setting. So as we get into a more normal market, people have a tendency to forget, right, the past, and they start throwing money at the problem. So that's what we really mean here, right? The trick is to stay lean and continue to stay lean. We see it very clearly with AI. Newsflash is not going to solve world hunger now. Eventually, it might, and that's certainly part of the equation. Now, when it comes to the POS configurability, if you truly look at your POS as a point of sale, a representation of your brand where transactions happen, whether in consumer direct or distributor retail, this is the result of internal planning, people, and process, right? and you need the POS to follow suit in a fair amount of time. So if you add programs, you decide to do X, Y, and Z, and affects the consumer experience, it affects the loan officer's origination process, you need those systems to react quickly. And you can't do that with custom code, because we all know custom code, testing code, right? Delivering code, and then maintaining the code. Not only is it expensive, but it's just time consuming and it's error prone.
Time consuming, error prone, and even more so considering the diverse and increasingly diverse needs of borrowers out there, which when I think necessity is the mother of all invention, I think in terms of products and programs that have been rolled out to cater to our modern lifestyles, which the industry has gotten down. But it also applies to technology when it comes to configurable POS. And I'm wondering how, and this is saying nothing of VantageScore 4.0 or things of that nature that the government's kind of throwing at us, at the drop of a hat. But how can lenders use technology, use a configurable POS to support all these different types of borrowers, as well as roll out some of these new products quickly?
I think the first thing to realize is to define who your target borrower is. Who do you best serve? Right? Maybe it's low FICO scores because you got great, FHA programs and, takeout partners for those programs. Maybe it's the high end of the self-employed, right? So I think it's super critical that any business, for that matter, really define who they or their ideal customer is. In software, we call it ICP, an ideal customer profile. It doesn't mean you can't solve problems and serve other people. It just means like this is the ideal person, ideal borrower we can be the best at in the world, right? And give them the best experience and give them the best process. So I think that's the first thing, because once you define that, then I think the second thing to realize is your technology should be catered to your 90%. Your ideal customer profile should have the absolute best experience with your point of sale, how that point of sale connects to your credit vendor, to your verification vendor, to your LOS, to your product and pricing engine, right? You will always have this 10% or so of good enough, if that makes sense. We don't want it to be poor, but we just know like 10 times out of 100, the system is going to be okay for these bars, but 90 times out of 100, it's going to be amazing because you really target it that way. So I think it's a fallacy to try to build a technology stack that caters to every single program, every single borrower type. You just can't do it. I mean, even the best in the world, like Amazon, can't do that entirely. So what, makes a much smaller company like ours, right, think we can do that. So that's what I would say about it. It's you got to set a realistic target of who that ICP is, who that target customer is, and solve for that up to like solve for that up to near 100%, and make the rest good enough.
You're thinking about kind of this connected borrower journey, and I'm hoping you can speak a little bit to the point that I just made about the POS acting as that front door to the full ecosystem, especially as lenders move to focus on the borrower experience and catering a truly modern experience.
Yeah. So here's the interesting. Let's use the front door as an analogy. So the front door today is the mortgage point of sale. Well, truly, it's your public website, it's your relationships, right? That's the representation of your brand. The point of sale is a utility. It's a way to get in and out, right? And once you open that door and you get into the building, there's a process, right? You wait in line over here, you check your badge over there, you verify your ID over there, and there's a key card for the elevator and so forth and so on. That extent of a POS is the initial reaction to a serious inquiry, right? The POS is not only has to perform well in terms of speed, it has to look professional. It has to be, and it has to also be very usable, right? UI and UX are two completely different things. And this is where BeSmartee, for example, kind of takes it a little bit further, is rather than just being that front, that lobby for our clients, we also put a lot more functionality in that lobby, such as live product pricing with loan estimate quality fees. Not the model for every lender, or for those lenders that need it, right? Or automated disclosures 24/7. Right. So we look at consumer experience and get in that brand representation as the core UI, the UX, right? The consumer experience. But we also define consumer experience as functionality that's absolutely necessary that differentiates the lender from the rest, whether it's a native mobile app, right? Automated pricing, automated disclosures, an easier verification process, right? Now, here's the interesting thing I'll say is the front door is changing. Because once you're in that lobby, there's a lot more places to go to, right? So we also see the point of sale as being the eventual front door for your customer for life strategy. So what I mean by that is a customer comes to you, they go through this front door, aka the mortgage point of sale, and it's a good experience, cool. And then the transaction ends, they leave the building, right? Well, the holy grail is to get this borrower to interact with your brand at least monthly for the next 5 years. Because if they do, you have a really high likelihood of getting re-engagement. We all know re-engagement is a lot cheaper than, new engagement of borrowers. So we also see this front door leading to an ecosystem in the future where a borrower will want to remain on it. The lenders want to pay for the borrowers to remain on it because it'll create additional opportunities in the next 5 years, whether it's referrals or second and third transactions. So again, moving away from mortgage transactions into home ownership is really kind of the next step, I think, for this type of point of sale technology in our industry.
Yes, and borrowers today are also expecting kind of like an Amazon, or I guess it used to be Tesla type experience of seamless mobile first type of thing that they might get from other consumer apps. And so let's bring that into the POS realm. How, and kind of looping everything together, because this will be the last question I ask you. But we've talked configurability when it comes to a POS. We've talked the borrower experience. A strong mobile app is part of that. How do you at BeSmartee meet these rising expectations for convenience and immediacy of modern borrowers?
Yeah. It's interesting you leave out like Amazon and those big companies, because that really is who we're all competing against, right? These Ubers and these consumer apps are so darn good. They've set a bar. If you're not, this good, you suck. And building what they've built is extremely complicated, extremely time consuming and difficult. It is all doable with a lot of effort and focus. So I just want to call it out because I find that really interesting, right? We are competing against Amazon, whether we like it or not, because we're always being graded against Amazon, Google, and Microsoft, right? All the the biggest companies in the world. That's just the way consumers expect it. Now, with that in mind, the mobile app has been a game changer for us, to be honest. So we refrained from building a mortgage app point of sale for years. And we finally greenlighted that a couple years ago. We went live with the product about a year ago. And it's been a big difference maker for us. It's what I found is some people love it, can't live without it, absolutely need it. And some people are like, yeah, it just doesn't move the needle. But the people who love it so much, like it doesn't go anywhere. If that makes sense, right? Like it doesn't get booted from the lender's ecosystem. So when you bring configuration into it, right? So it makes things more complex because now you have a web app. And behind that web app, you have all these systems it's connected to. That's pretty complicated to start with. Now you introduce a mortgage, mobile app. That's a different way to deliver the same data, the same experience. So it does complicate the world. Now you have to manage not just the website, right? You have to manage the mobile experience when changes go in. You have to test for that. You have to optimize that. So the way we kind of done that is we've clearly differentiated what the mobile app does and doesn't do, and what the web app does, which is everything that the mobile app doesn't do, essentially. And we really took great care in figuring out what is that 90% of functions and benefits that our users need in the mobile app, and we put it there to start. Eventually, we'll go out and move in, the rest of the functionality to the mobile app, because we do see a world where you can originate and close a loan just from your phone while in, Italy on the Mediterranean. And the configurations from the point of sale vendor, it needs to carry through all channels. If that makes sense, right? It can't just be for the web app. It can't just be for the mobile app. And it can't be for both at the same time. They have to be a little bit different because you have less screen space. You have a different experience you want to deliver on mobile. So you do have the, sets of configurations that are equally strong on web and also on native mobile.
It makes sense, although you got me daydreaming about closing loans on the Mediterranean now. I'm out here in Wisconsin and it's actually pouring rain today. And so that sounds pretty nice. I love where you're headed, just in general, speaking with you. It's kind of pushing the industry forward. The things BeSmartee is doing is really neat and always nice to get your perspective. So thank you very much for the time today, Tim.
Rob, it's my pleasure. Always good to talk to you, sir.
After a nearly empty data calendar yesterday, today is an active one. We've already received jobless claims in at 226,000 with 1.974 million continuing claims, which is actually the highest since November 2021. And we've also received preliminary Q2 productivity and unit labor costs, up 2.4% and 1.6% respectively, both decent news. Later today brings wholesale trade for June, consumer credit for June, the July survey of consumer expectations from the New York Fed, Freddie Mac's primary mortgage market survey, Treasury activity that will be headlined by $25 billion of 30-year bonds, and remarks from Atlanta President Bostic. We've also received the latest rate decision from the Bank of England, a 25 basis points rate cut. We begin Thursday with agency MBS prices a touch worse than Wednesday's close, the 2-year yielding 3.71 and the 10-year yielding 4.22 after closing yesterday at 4.22. Let's wrap up with a joke and some housekeeping. An Irishman walks into a bar in Toronto and orders a drink. The bartender asks him, "What brings you to Canada?" The Irishman replies, "Well, I was in a pub in Dublin and the co-stander in my glass said, 'Drink Canada dry,' so I thought I'd give it a shot." Thanks again to Total Expert, the purpose-built customer engagement platform trusted by hundreds of modern financial institutions. Total Expert turns customer data into actionable insights to help lenders engage and guide consumers through complex financial decisions. To learn more, visit totalexpert.com.